Welcome back to Fast Money. Bitcoin breaking down today, dropping below $30,000 for the first time since January. The crypto did stage a midday comeback. You can see it very clearly in the charts. But in what direction is it going from here? And for more on Bitcoin and other speculative trades, we're going to bring in Chris Verrone of Strategas. Chris, take it away.
Hey, Courtney. Yeah, I think when we talk about Bitcoin and the other speculative corners of this market, we have to talk about A, the charts, but B, what are the macro implications of what they're telling us? And if you look at Bitcoin specifically, I brought along a couple charts here. The first chart, we do think this is a pretty big top formation. I mean, Bitcoin's already down 50%. Our view has been from here, best case dead money, worst case lower. And if you look at the last really 30, 35 days, we've spent it in this 30,000 to 40,000 range. That's nearly identical to the range we spent in January and February, but with one big difference. Back then, you were above the 200-day. Now you're below the 200-day. So the technical condition of the chart has deteriorated. We think that upper 30, low 40 range is going to prove to be big resistance moving forward. And I think when you get declines of this magnitude, down 40, 50%, you need to see the period of apathy or disinterest that typically follows that. And that's what I'm not convinced that we've seen yet. And frankly, that takes some time. And that really brings us to our second chart. Just looking historically or longer term, when Bitcoin breaks, it tends to stay broken, and it tends to stay broken for a while. So what I'm just showing you here is Bitcoin versus the 200-day moving average. Two periods, 2014, 2015, you spent 380 trading days below the 200-day. And 2018, 2019, you spent about 316 days below the 200-day. So when we've seen this break trend, it tends to stay broken for a longer period of time. And I think Bitcoin, more broadly, if you go to our next table here, thinking about Bitcoin as one of these speculative darlings of the last 6, 7, 8 months. And if you look at what Bitcoin was at one point this year, up 120% at one point year to date this year, down to roughly flat now. And that's true for a lot of other of these very speculative securities. The IPO index at one point was up 20, now it's flat. The ARK fund was up 26, now it's down 2 or 3. You kind of go down the list, whether it's the SPACs or Tesla or the solar ETFs. We've seen the air come out of all the these speculative trades. What I think is notable, though, bond yields have come down from 175 to 135, and that still has not been enough to kind of reignite the flame behind some of these speculative trades. And that brings us to our last chart, which is just tech broadly. And I'm curious, does the weakness in all the speculative groups, does the weakness in Bitcoin ultimately start to weigh here on tech again? Now, I recognize tech in the absolute sense is at new all-time highs, but it's not there in relative dollars. And I find that notable. Tech relative to the S&P has not made a new high here. And I think it's interesting when you put it in context of bond yields. Again, bond yields have come down and tech has not returned with the same type of leadership. So for us, looking at these speculative trades, looking at Bitcoin is more about just their chart, but also more about the macro climate that they operate in.
Chris Verrone of Strategas, thank you. Let's trade this. Karen, what do you make of these charts and this analysis?
Well, I'm long Bitcoin, so I do, watch it pretty closely, and some other currencies as well. I thought it was interesting, but I am not a price action junkie, and I don't mean to take your role, Courtney, but I want to ask Guy a question.
Yeah.
Which is, Guy, when you look at the price action today, would you say Bitcoin had a good day because it broke 30 and then was able to rally back and actually close in the green? Or did it have a bad day because, in fact, it broke 30 and we'll see that again?
Yeah, thanks, Karen. I would say the latter. And, Tim talks about this all the time. The trades, trades typically, you're looking for things that create the most pain for the most amount of people, sort of the reverse utilitarian thing. And in this case, my sense is that will be lower for Bitcoin, and that's probably what's going to happen. If you just look at this as a commodity, it's trading exactly like a lot of commodities do, stairs up, elevator down, and here we are. Carter Worth has talked about this. 20,000 was resistance back in 2017, December. Past resistance becomes support, and just the way it's trading lends me to believe that we're going to see that. Now, if you're of the belief, like a lot of people are, that this is a $500,000, $1 million thing, a move from 30 to 20 is negligible. But if you're trading it just around the 20 to 60 range, it's significant. I would wait for the pullback to 20, in my opinion.
Tim, Guy threw you in. What do you make of it?
Well, I think part of this is momentum, and momentum lost is something that I think is going to take some time. It's interesting that a lot of those trades broke down in mid-February, and there's different reasons for it. But again, if you look, as Chris Verrone referenced, the triple Qs essentially were at all-time highs against the S&P on February 11th, and then his chart showed that breakdown. And I think ultimately, whether it's the SPAC index or whether it's some of these space names or EV names, I think those were symptoms of a market that just was too frothy. And I think in some sense this is all very healthy. Look, Bitcoin advocates and really digital advocates, so blockchain and all of the dynamics around this are things that most people think are it doesn't matter. They're indifferent to these types of moves. They've seen it before. And I think there are, as Guy said, there are a lot of traders that have been caught at the wrong time here, putting the most money in at the peak. But most of the folks that are hardcore Bitcoin and digital advocates are they're not even thinking about this. Yes, they're upset about the move in their P&L, but I think it's expected after the move we had on the way up.
And they also have red eyes. I just looked in their pictures, right? On their social media
You got to have
accounts.
your red eyes.
Got to have red eyes.
Got to have your red eyes.
Shepard Smith here. Thanks for watching CNBC on YouTube.